Namaskar. I am delighted to welcome you all to our C-Suite Executive Fireside Chat show, hosted by Sustrate Advisory. We are thrilled to have a diverse group of participants, including professionals, students, and aspiring ESG champions, all eager to deepen their understanding of this vital topic. Please welcome to our guest, Dr. Suman Chowdhury, sir, Executive Director, Chief Economist, and Head of Research at Rating and Research Limited. With over 28 years of leadership experience in credit ratings, research, and risk management, Suman sir brings a wealth of knowledge from his diverse experience spanning corporate, infrastructure, financial sector, and structured finance rating. And alumnus of prestigious Indian Institute of Management, Kolkata, Suman sir is a renowned expert in his field. Based in Mumbai, Maharashtra, India, he continues to drive throughout leadership in the industry. Today, he will be providing us with a valuable insight on ESG ratings and sustainable investing, shedding light on the latest trends, the best practices in this critical area. Please give a round of applause to Mr. Suman Chowdhury, sir. Now, let me welcome moderator for today's session, Dr. Anirban Gupta, sir, co-founder of Sustrate Advisory. With over 30 years of experience in sustainability, ESG, and business strategy, Dr. Sen Gupta sir brings valuable insights from his tenure at Credit Rating Information Services of India Limited, CRISIL, India's leading credit rating agency. Duff and Phelps, a global advisor specializing in valuation, corporate finance, and dispute consulting service. Fitch Ratings, a renowned global credit rating agency, providing independent credit opinion. Dr. Sen Gupta sir expertise will undoubtedly enrich our discussion today. We welcome you, sir, as our speaker, Suman sir, and to our co-founder, Dr. Anirban sir.
Thank you, Harshita. And thanks to Suman for having taken his time to join us today for this Fireside Chat show. Suman, can you see me?
Yeah, I can see you.
Good.
Please, thank you so much for inviting me to this session.
Right.
I'm sure it will be very educative. I hope it will be educative for the people who will join this session.
Sure. Great. So, Suman, I think we'll start off where I will request you possibly to say a few words about your group. I think in the group, there is a long history of ratings, your SME ratings, credit ratings, now ESG ratings. Possibly you can just take us through the group a bit.
Absolutely. I will do that. Thank you so much for the opportunity. I think, many are already aware today of rating agencies, of equity ratings and research. But let me give a little historical perspective on how this group has evolved over the last more than 2 decades.
Right.
As you know, that credit rating started in India quite some time back. It was in the late 80s when CRISIL was incorporated, followed by another 2 and 3 rating agencies in the 90s. That was a time when credit rating was, as a concept, was very nascent in India. Subsequently, the market expanded very rapidly once, the Basel II guidelines were implemented by Reserve Bank of India. Then this whole thing of bank loan ratings came into existence. And the sheer volume of bank loan ratings went up to such a high level that it kind of created more awareness in the corporate sector, not only in the corporate sector, but also in the MSME sector. So ratings became much more familiar concept. But it was not so when I started my career in CRISIL in the 90s. when I worked in CRISIL and also in ICRA. So it was, everywhere when we used to go to the clients, first we had to make them, we had to explain to them what is credit rating all about. So I'm happy that it is not the same situation today. It's a very more educated, more aware market. Coming back to Acuite Group, this was meant to be an SME rating agency. So in the mid around 2006, the government of India realized that while there are rating agencies for rating large corporates, there is a need to look at small enterprises a little differently. So the need was felt to create a new rating agency, which will primarily undertake SME ratings. Rather, I should
Right.
call it gradings. It's not the same scale of credit rating, a little different scale, which will be there for small enterprises. That was the idea which took shape in the form of SME Rating Agency of India, which was the
Right.
first name of our company. It was called SME Rating Agency of India. The then finance minister actually inaugurated our first office in Coimbatore. That was in 2005. That is
Right.
how we were born. And subsequently, our focus for some years remained in SME ratings. What happened in 2011 and 12 changed the course of this company. We got the license and accreditation to do all kinds of ratings, the regulated ratings,
Right.
which is bond ratings, bank loan ratings from SEBI and Reserve Bank of India. It followed in quick
Right.
succession in 11 and 12. After that, we are, as we call it, all service, full service rating agency, as is the other big rating agencies as we know. So
Right.
since 2012, we have been rating all kinds of products, be it bank loans, be it bonds, fixed deposits, commercial paper, all the debt instruments that the market can conceive of. So that is how the journey has been on rating side. We continue to do SME ratings separately. As per regulations, we had to hive off the SME rating business into SMERA. The last thing and very interesting thing, which is also the part of our discussion today, is ESG ratings. Incidentally, we were the first, Anirban, the first rating agency in India who conceived of the need to have a separate company for ESG ratings. So we
Right.
incorporated this company, ESGRisk.ai, in 2020, in the peak of the pandemic. This was all
Right.
the brainstorming. We had started our background work before the pandemic, but a lot of
Right.
it happened during the pandemic when we were all
Correct.
working from home. So, and it took shape in November 2020. We created the company. Subsequently, we had tied up our data, data, the data part of it, data analytics, with a partner. And we had data to do ratings. We developed the methodology and we did ratings for more than 1,000 listed companies over the next 1 year. That is in 2021-22. So today, as I speak, we have coverage of over 1,100 companies in ESG ratings. We have ESG rating reports on 1,100 companies, which are available in a platform. If you go to our website, you will see, of course, it is subscription based, but we have this whole, kind of report platform and information available to whoever, which investor, banker, they want to get a sense, want to understand how we rate ESGs, what's the kind of ratings we have assigned. It's all available today. So I'm very proud as part of the Acuite group to have conceived this idea 3-4 years back and kind of reach this level. We have also incidentally got the regulatory accreditation because ESG ratings today, as we will discuss further, is now regulated. Last year, the regulations came in. And today, we were one of the first actually to get the license, as they call it now ERP or ESG rating providers. So we are one of those ESG rating providers, and that is where we stand right now. Right. Thanks.
So great. I think Suman, it's really a pleasure and this thing for us to get you guys who are the first in this business to talk to us, because you bring that expertise over the last 4 or 5 years. I mean, although ESG ratings possibly is a new concept for many of us, but I think for people like you have been in this business for last 4 or 5 years, so you are really a master in this, and it's really a pleasure and honor for us to talk to you.
Definitely.
Suman, as I find, I mean, when we talk to different people, that I think people like us, we are still struggling to understand possibly the difference between credit rating and ESG ratings. Credit ratings, as you mentioned, that I think the market has become much more comfortable today, understanding what credit rating is all about. And what we understand is that credit rating is essentially for doing a credit assessment for the debt instruments of a company. So, which
Right.
means when a company is raising funds through the debt
Right.
route, for the
Right.
debt instruments, a rating is assigned, which
True.
reflects possibly the risk associated with that particular with the debt instrument, and that rating itself possibly determines the cost of funds at which that
Yeah.
organization can raise the funds. So if
Absolutely.
that is credit rating, and what we understand, it essentially entails a business risk assessment, a financial risk assessment, and possibly an assessment of the overall quality of management.
Yeah.
If that is what credit rating is all about, then what is ESG ratings and what is the difference? If you can just take us through, I think
Right.
that will be great.
Right. Right. I think that's a very fundamental and rightfully the first question that any student of ratings and ESG should be asking. Uh, you are absolutely right on credit ratings, and you are yourself have been a student of ratings at some point, and so clearly you are very clear on your concepts there. Yes, credit rating is about highlighting the credit risk. So whenever any investor is investing in the bonds of a company, basically in any debt instrument, as you rightly
Right.
said, or it can be a bank loan, and
Correct.
what they're interested in is to understand the probability of default. Or if I put it
Correct.
another way, if what are the losses they're likely to incur? If
Correct.
they invest, what is the risk of losses?
Correct.
Put it simply, there are many ways to define credit ratings. To put it simply, it is a way to assess the risk of losses. So, in another way, if I put it, what is the likelihood that I will get my money back? If I put
True.
it in a very layman's term,
Correct.
right?
Correct.
So rating is supposed to indicate that. For example, if it is AAA in the AAA scale, it is supposed to tell you, look, the risk of not getting not getting your money is absolutely minimal. You are in all likelihood, you are the probability of default is tending to zero.
Right.
That is negligible. That is what a AAA company is all about.
Correct.
This is what is credit rating for us, right?
Correct.
ESG rating or ESG assessment is a little more broad-based. It is not very specific to any debt or repayment of debt. What
Mhm.
it's basically saying is what is evaluating is the ESG risks that a company is exposed to, and the ESG performance means how it is trying to mitigate, how is it successful in mitigating ESG risk, what is it doing to mitigate the ESG risk. This is essentially what is evaluated in an ESG rating. So
Okay.
fundamentally, ESG is why, and then the next question will be, why do we need it? Why
Hmm.
do anybody ESG? And I'm sure the
Correct.
listeners will already know that ESG stands for environmental risk, social risk, and governance risk. So
Right.
this, why are these ESG pillars important today? And for that, I'm sure the students of sustainability will know that increasingly, and especially in this 21st century, uh, everybody now understands that any business has to follow the principles of sustainability. Today, it is not about making a lot of profits only and giving returns to shareholders. It is about giving sustainable returns to all stakeholders, not just shareholders. And who are the stakeholders? It's a much more diverse terms. Beyond shareholders, it is the employees of the company, the society, the environment, the whole world. They are all the stakeholders, right? So that is how it is a larger look at how corporates should do their business, which will reduce the risk of environment that we increasingly face, the risks of the climate risk that we face, there are other issues in the impact on society, the governance risks that are there in corporations. How does a company reduce all these risks? That is very important to measure today, Anirban. And why it is important to measure? Because there are investors today who are sitting on trillions of dollars of fund globally, as you know, whether it's in US, Europe, in the developed nation. They believe that these factors are very important. These factors, how a company does its business, it is not anymore only the return of capital or return on capital. It is about your return to all the stakeholders. So what is the return you're giving to all the stakeholders? That is what they want to see. That kind of measure is necessary today. And that is where ESG ratings has come, not only globally, but in India.
Great. I think you have very nicely put it forward. So, which means that ESG rating is for the company and not for any instruments.
Absolutely. 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 So another point I wanted to add, since you
Right,
mentioned this,
right.
many people think ESG ratings have nothing to do with the financial. It has no linkages with financial performance. To be honest, uh, financial performance is not one of the matrices that is looked into for ESG ratings. How much is your return on capital over the last 5 years? That's not a metric that at least we, and I don't think most of ESG rating agencies, rating providers will look into. But how you manage ESG risk has been, we have done this study that how one company manages an ESG risk in the long term, it will determine its financial performance. The companies that are not able to manage ESG risk, they may get into governance, just to simplify terms, they may get into governance troubles, they may get into some societal issues, they may get into some environmental disasters, right? Which might disrupt their businesses, which might lead to a sudden shock to their financial performance. So there is a correlation between your ability to manage ESG risk and your long-term financial performance. So I wanted to put that on the table, that ESG, therefore, ESG assessment of ESG risk is very important to understand the long-term financial viability and performance of a company.
Right, right. You actually covered a lot, I think, through this statement. You have talked a lot because we keep on reading that a lot of experts mention that how the getting into the ESG ratings or good ESG performance actually has a positive correlation with financial performance and all those stuff. So what actually comes out is that at the business school level, okay, when we talk about assessing a business, assessing a corporate, and the way that we had been doing it, where we look at the market performance, the operations performance, and the financial performance and the strategy issues, I think this whole bringing in of this ESG risk actually broadens the whole perspective of risk assessment much more in a way that we have never actually been exposed
Done
to, I
before.
think.
Done before. Yeah,
And and
absolutely.
and my reading is that even currently also, if you look at the whole way in which the business studies happens, whether it is at the graduate, undergraduate level, at the business school levels, this whole dimension of ESG coming in the way that, as you explained, I think that widening of the approach has not yet really happened. Maybe
Absolutely.
there are certain pockets where it is happening, and that is why a lot of experts are saying that how we bring in the concept of ESG or the word of sustainability, because that is, of course, takes us into a little different track. But how
Right.
do we get those at the core of the business studies?
Correct. Correct.
So which means that there is a lot to be done. I mean, I think this
Right.
interaction is actually telling us that, right? So which
Right.
means that coming
True.
back to the ratings point of view, since you already has taken a view on the ESG ratings of about 1,100 companies,
Absolutely.
which may not be publicly disclosed to us, but I'm sure on a subscription-based model, those who are looking at
It's
that,
available in a platform. Yes.
absolutely. Do you really find that organizations who are having a good or higher ESG ratings typically are also having good or higher credit ratings? Is that happening like that, or difficult to correlate?
We honestly, I since we have been doing these ratings just for maybe a couple of years now.
Right,
I think it's an interesting idea. We should do it, but I can give my personal take on this. Uh, there is over a period of time there will be a correlation.
okay,
Currently, currently, as you know, the how the ratings methodology, the standard ratings methodology is very focused on the next 2 3 years. So as you know,
right,
that rating analysts focus on cash flows that a
correct,
company will generate over the next 2 3 years. Yeah, so they are not looking at a very a long-term viability of the business so much. So whether it is, let's assume it is it's a coal business, some coal trading business, or even a
correct,
thermal power plant. So what is important for a rating analyst, for a traditional rating analyst, is just to look at the cash flows, look at the debt and the debt servicing ability. And if the debt
right,
servicing ability is comfortable, they are very likely to get a good rating.
right,
If you look at from that wider perspective of ESG, then things are a little different because you are trying to look at the future of that business, not in the next 3 years, but in the next 10 years, 20 years. Is there going to be a demand for thermal power? What will be the cost of thermal power? Will people use thermal power? So there are many questions that need to be answered in
right.
that context. Therefore, today, if you ask me, the correlation is not that high. But I believe that as rating agencies, and let me tell you that some of the rating agencies like us,
Hmm.
we have started to look at, it's not having a major weightage today, but
Hmm.
ESG factors are being mentioned in the rating rationals. So if you look at
Okay.
some of the bigger companies, their rating reports, it is starting to cover ESG factors. So slowly rating agencies have started to look at it, but it is still very early time, and the focus remains on only debt servicing ability over the next 2 3 years. So today the correlation is not very significant, but over a period of time, I believe that correlation will improve. You will see that the companies with high ESG ratings will also have good credit ratings. That's my
Great,
beliefs.
great, 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 great. Good. Suman, so with that background, we would love to understand from you uh, how this ESG ratings is done. I think SEBI has come out with very clear, transparent guidelines on the
Correct.
process, but I am sure many of us here on the platform or in the market may not have been looking at the SEBI guidelines. So I think
Right.
if you can just explain to us, take us through that how the ESG ratings are done, what are the parameters and how do you look at
Yeah,
that? Yeah,
sure. I will try to make it a little simple, keep it
please.
simple,
Yeah,
because
yeah,
there are, some intricacies or nuances involved, which is
right.
not possible
Fair enough.
for us to cover it in a short
Correct,
time.
correct.
So ESG, when we look at ESG, and this is the comprehensiveness of the methodology will vary across rating agencies,
Correct.
but I'm just saying what usually ERP, ESG rating provider will look at.
Right,
So when we do an exercise, then you need to look at these three pillars, as I mentioned earlier. E, S, and G. G,
right.
right? Environmental factors,
Mm,
social factors, and governance factors.
mm,
So these are the three pillars.
mm,
Now, all of them are further broken down
mm.
into what we called key issues first. So there are,
Okay,
for us, for example, there are 34 key issues, all
okay,
put together under these three pillars.
okay.
If key issues can be, just to give you a sense, GHG emissions under
Mm,
environment,
mm,
greenhouse gas emissions, that's a key issue.
mm.
Then these key issues are further broken down into what we call the data point indicators or indicators. So indicators are, you kind of break it down into specific parameters or specific questions. So for example, today we have fundamentally around over 800, if I'm probably around 850
Mm,
indicators.
mm.
All those are the detailed components of how you evaluate those 34 key issues that I mentioned.
Okay.
What are the questions you ask? What are the data you see? What kind of documents and policy that you want to see? All of those are included under
Mm,
this components, which
mm,
we
mm,
call the indicators. So we have
mm,
more than 800 indicators, which is a fairly
mm,
comprehensive
mm,
methodology, a
mm,
taxonomy, as we call it. It's a comprehensive
mm.
taxonomy. And we have tried to cover each and every possible factor. Now,
Right,
when you look at this, now one important factor is all businesses are not similar, as you know.
right,
And ESG, we are rating even financial services business, services industry, as well as
right.
manufacturing.
Correct,
Therefore, industry to industry, the materiality, the concept of materiality of these risks
correct,
factors, the materiality of these indicators will be different. So
correct.
for GHG emission is a big factor, for example, in a thermal power business, for example, in a steel industry, whereas
Mm,
for a banking sector, for a
mm,
bank, GHG emission is less, is
mm,
having less of materiality.
mm,
So
mm,
this is how, this is therefore the next thing that has been
mm,
done. These are all done and dusted.
mm,
That all the
mm.
sectors, the weightages of each of these indicators or key issues, if you ask me, these are all predetermined or these are all decided and based on the nature of the industry, which key issue is more important for each sector, that is decided. And then accordingly, this methodology has been developed. This is a very, I would say, very detailed model that we have developed, quantitative model. Recently, as you rightly mentioned, SEBI had come out with some prescriptions. They wanted us to not only give the ESG score that we come out with, but also with the transition score. Means, is there, what is kind of improvement in score that is coming? Then there are some core indicators they wanted us to look at, a core score. So there are
Correct.
some prescriptions they have come out with. We have modified our methodology
Right.
based on those inputs that we received from SEBI. And today I would say that we have a very robust methodology which captures the nuances in each and every industry. So to answer, it is not that we are trying to put the same model for a bank and a steel company.
Right.
We have modified our approach based on industry, and so that we can compare the apples with apples and oranges with oranges. So steel
Right.
companies. So another distinctive thing, Nirban, in our reports is that we give peer benchmarking. So for example, in our report, just to, let's say if we have a report
Right.
on, for example, Tata Steel, just taking any name, then you will see that we have peer benchmarking with the top steel companies of India, and broken up not only into the just the overall score comparison, but ESG, each pillar comparison, ES separate environmental score, governance score, and we even drill it down to some of the those key issues to find out which key issue, who is a better performer, who is a little lagging behind. We try to bring that out also in the our reports. So that's so just to complete the answer to your question.
Correct.
So an analyst, there is already a model. There is a lot, as you know, in ESG, there is a lot. The information is available today in public domain, and we are a subscription-based platform. So we are not in the traditional model of ratings, as you know. As most of you will be aware, we seek information from the company. In a subscriber-based platform, this information is already available. It is expected to be already disclosed. As you are aware that SEBI has taken a lot of initiatives way back, from 2011-12, they put up something called a business responsibility reporting. And in 2000, if I'm right, from 21, they introduced this concept of business BRSR, business responsibility and sustainability reporting, BRSR. So this is a very detailed format in which a lot of information has been disclosed by the top 1,000 companies of India, which we are rating. So this is the input that we have. So we have, data systems which pick up the public domain information. It comes to the model gets populated. The model is already available. Then it comes to the analyst. Just to explain the process briefly, the analyst looks at that model output. The analyst's inputs are to kind of sanitize the model, see if there are any errors. There is also a very wonderful engine we have developed where, a report is generated based on the model output. So where the analyst has to give only comments. So there are text boxes, there are spaces where an analyst only needs to give some comments, which are going to be added to the report. And that really has really helped in improving productivity. So we are able to generate reports on ESG in a far more efficient manner, and where the analyst is just looking at, the scope of errors has come down. And because a lot of data is just extracted in the system itself. It is not that an analyst in the good old days that an analyst has to prepare a report, create tables, nothing like that. So it's a very, I think for the new generation, this is a wonderful way to work that I think that some of the innovations we have done. And this helps us to kind of come to a rating outcome very quickly. Then it goes to, as per the regulations, it has to go to a rating committee, and the rating is validated, or if there are any changes suggested. And that is how an ESG rating is done. So this is how it is. I think we have covered, as I said, 1,100 companies, and in a very short period of time. Because of this, I think this platform that we have created, the way but I think otherwise it's very difficult, because the kind of data points we have, as I mentioned, to over 800 indicators, it's not very easy to do it unless you have the support of technology.
True, absolutely, correct. So, which means that when there is so much of data points, from on which you have to get the data to be collected, and they're all from public sources, which is
Disclosed by
essentially disclosed, which means essentially from the annual reports and possibly from the BRSR reports.
Yes. So what happens is, Anirban, and typically the listed companies, they enclose the BRSR along with the annual reports. Sometimes they publish it separately also. So, but usually it is along with the annual report.
Correct.
So that is the core source of information. There are other sources like any company communication, their websites. There is a lot of policies. Let's say policy on any policy for the matter. There are or whistleblowing, just to tell
Correct.
you, a whistleblowing policy, for example. So there are many of these things which comes under governance.
Correct.
So that those things we can look at from the website. There's a lot of information from the ESG perspective. There is a lot of information on policies that is available in the website itself. So we look at all public domain sources, and that is how we get this information.
So which means that for a company, I mean, just for sake of discussion, I'm asking you, for a company which is not yet filing its BRSR report, it is difficult to do an ESG rating for that company simply because so much of information may not be available publicly through the annual report.
Absolutely. And that is why, we focused on only 1,000 companies. As I
Correct.
told you,
Correct.
is because these
Correct.
1,000 companies are now mandatorily required to publish the
Correct.
BRS.
Correct.
So
Correct. Correct.
so that is why, a subscription-based model can only cover those where
Correct.
those kind of disclosures are available.
Correct.
Having said
Correct.
that, you will be very interested and happy to know
Right.
that there are certain companies who are actually started voluntary disclosures.
Right.
Even up to the requirements and even more than what BRSR is insisting, beyond the 1,000 companies, I'm saying. So we
Right.
have actually covered some companies. That's why it is more than
Okay.
1,000,
Okay.
because they have
Okay.
voluntarily disclosures which are very extensive,
Right.
and we are able to give them a rating based on public
Great.
information.
Great. Great. So which means that, I mean, I think then from that, I mean, given all this, one thing which comes out that I think SEBI has done a fantastic job in terms of, sequentially going, coming out with the concept of BRR report, then to BRSR, ensuring that so much of information is available, and then getting the ESG rating providers,
Correct.
and coming up so that they can really work on this information, come out with the
Correct.
scores and disseminate to the stakeholders
Correct.
to take it forward.
Absolutely. I would say the efforts that, the way SEBI has approached it, I
Right.
think they have been looking at disclosures for listed companies for a very long time. And they have
Correct.
been pressing for better disclosures. And I
Correct.
think it's a difficult job, if you ask me, because
True.
realistically, there is a lot of pushback. Even on
Correct.
BRSR, as you know, there is a pushback, and companies do mention that there is a challenge in
Right.
providing such information. There is
Correct.
indeed
Correct.
challenges on the ground.
Yes. Yes.
But SEBI has been insisting, and that is how information is available.
Correct.
Having said that, I think the next information now is available up to a certain extent. The next thing I think that the regulators are looking into already,
Right.
which is going to take some time, is what they call information assurance, or the assurance of that quality of information. How are companies measuring this ESG performance? Are they having an objective way to measure it? Is there a third party who is measuring it objectively? Those are the issues that are coming up now. And that is where I'm sure the regulators will apply their mind and make sure that the quality of information, it is not just the quantity, the quality of information is also reliable and good enough for rating agencies to use it.
Great. Just one angle on this issue, and then before we move on to the next mega theme, is that when we talk about this 800 odd data points, and you were collecting it from the various publicly available sources like annual report, BRSR report, etc. Okay. And then you are putting it into your model, and then you are getting the scores coming out.
Absolutely.
How much is the room for qualitative judgments of the analyst into this whole assessment? Because everything looks to be very quantitative, data oriented.
So the interesting thing is, Anirban, is that this is really a tectonic shift, I would say, from the earlier days in how ratings were done. So, and we initially, when we started, we had a very clear idea. We will make it as objective, as quantitative as possible.
Okay.
So we have tried that, and I think we have been reasonably successful. Now, therefore, all the inputs, as I said, our model that the whole model is designed as such, it is based on objective information. There is no qualitative statements there, apart from yes, no, and some maybe, some scoring based on that. There is absolutely no qualitative input. Where the qualitative input will come, I will explain very briefly, is there is a
Right.
concept of called controversy, which we have. Controversy is something related more to governance. So,
Okay.
controversy, as you know, it's a specific, which means, let's say, without, naming any company, let us say some information comes that there is a government action, or there is a tax claim on a company, or there is, let us put it that way, there is a tax raid on a company. That's a controversy, and it impacts the reputation of a company. It can also lead to loss, higher, it has to be, it will impact the P&L of the company, right? So we look at those controversies. We also look at any product controversy. For example, any product which is misleading. They are doing something which is very misleading. The claims are misleading. There are many ways these controversies are generated about a company, right? So this, we assess it also, the extent of controversy, and there are there is a qualitative judgment made. What is the extent of this controversy? Is it a very serious controversy? It is a moderate controversy, or it is a kind of a small controversy? Accordingly, there is a way, there is a kind of what is a negative scores that are given, to which impacts the final scores. So this is where a little bit of qualitative judgment comes of the analyst and the team. But that's the only part where it comes. So you can say that it is today our ESG rating methodology, our models are extremely quantitative and objective.
Correct. Fantastic. I was just thinking through, and one thing which comes to my mind, that I think India is possibly the first country where the market regulator has taken such a proactive approach in terms of setting up the whole mechanism and trying to ensure as much of transparency as possible, coming out with the framework and doing everything.
Absolutely.
Globally, if you look at, I think none of the other countries, especially in the West, I think there it is much more voluntary and much more left to the rating agencies to come out with their process. So
Yeah.
how are the international ESG rating firms reacting to the domestic development that we see here? How do you think that the domestic ESG rating agencies score and methodologies are comparing with the international ESG rating providers scores of in India specific companies? Is there a match, or there's quite a gap?
Yeah. Yeah, it's an interesting question. So let me just, as you rightly said, I think we are, I would say, very happy with the way SEBI has kind of looked at this whole matter. They believe that this space of ESG ratings need to be regulated. Earlier, as I
Right.
said, we started when the market was still unregulated. We are the first rating
Correct.
agency. There are some, as you rightly said, there were still few multinational companies.
Correct.
You may be aware of them. They were operating all over the world. They were operating in
Correct.
India also.
Correct.
They had started rating the top listed companies only. The
Correct.
coverage was
Correct.
not so high, but they were
Right.
rating for some of the companies. So SEBI felt that this market is going to explode, but over a period of time, and so they
Right.
wanted to regulate and they wanted to be proactive, which I think is a great thing. And they decided to. They have a lot of learnings from what has happened in credit ratings, as you know,
Right.
from
Right.
what happened in some of the credit defaults, big defaults, ILFS, etc., etc. So they had a lot of learnings as a regulator.
Correct.
And they have tried to kind of put a structure of a very strong regulatory framework for ESG rating providers also. Having said that, I think today the industry is still evolving. It is, it is still very, very young, early days for the industry. Most of them, as you are aware, there are, by the way, the licensing is still in progress. There are category 1 and category 2 licenses that ERPs are being given, ESG rating providers are being given. We got in category 1 license. There are some rating agencies we got category. There is some category 2 licenses. There are quite a few, I would say, number of category 2 licenses and far more today. So the number of ESG rating providers today is almost getting not only double digits, probably going towards 20. So it's a very, number of players already are very high, and the market is yet to evolve.
Right.
The companies are yet to figure out on how are they going to exercise their choice,
Right.
what will be their preference. So it is I would say it's still a evolving
Evolving.
situation.
Correct.
The ESG rating providers are also yet to figure out what will be the right business model for them, on what will be their right target segment. It is still in a very, very evolutionary stage. And regulations have come in, which is always welcome. But I think there is also a kind of deliberations. It's an ongoing deliberation that the
Correct.
companies, the ESG rating providers are having a platform. The good thing about SEBI is created a platform for
Correct.
ongoing deliberations. So deliberations are continuing. So wherever it will kind of address some of the issues that ERPs are facing, I'm sure SEBI will look at a solution. So
Great.
yes, those that will be there.
That's fantastic. That's fantastic. Just one last question, I think. Uh, so the people who use the ESG ratings, how is the reaction from their side? I mean, with the developments coming in, how much of usage actually is actually happening? I mean, if you talk about the ESG based funds, or I don't know, I mean, maybe the banks or whosoever, if you
Right.
can just take us through a little bit about who are the ones who actually
Right.
should use ESG ratings, who are the ones who are making the use of it today, and how are they reacting to it?
Sure. So I can share our experience since we started, and we reached out. When we started, we reached out first to the mutual funds. So the
Okay.
mutual funds, Anirban has some specific today, and the number of such funds have increased. Specific funds, sustainability funds or ESG funds, as they call it.
Right.
So
Right.
globally, there are a lot of these funds. In India, these funds have already started.
Okay.
And mutual funds are, some of them actually have their in-house ESG teams also, and they are
Right.
looking at ESG ratings.
Mm.
So we already have worked with a
Okay.
few of these mutual funds. So
Right.
definitely they are one of the users.
Huh.
What is interesting is the bankers have increasingly become one of the major users. So
Okay.
we have worked with private sector banks who have used our ESG ratings.
Right.
We are started to work with public sector banks, a few public sector
Okay.
banks who are now becoming our subscribers to our reports.
Right.
So clearly, the need to look at to use this report, I think there is a need felt. The reason is for banks, there
Mm.
is a clear guidelines which are coming up from RBI. Also, if you
Mm.
look at
Mm.
climate risk evaluation,
Correct.
for that, I think the banks believe that they need to look at this ESG evaluation,
Mm.
because
Mm.
that covers the environmental risk also. So
Correct.
I think that awareness or that need is increasingly being filled, not only
Okay.
just by the investors who
Mm.
are investing, but
Mm.
also by the banks today in the
Okay.
country. So the requirement per se is gradually growing. Along with
Mm.
that, I think companies themselves, the way we have looked at it, companies themselves are showing a lot of interest in subscribing to this report, not only for
Okay.
their own report, but also to
Okay.
look at what is happening in the industry.
Okay.
how are other companies doing? It is,
Okay.
like when we were students, and let's
Right.
say you're a good student, you would be interested in to look at the other good students in your class.
Right.
How well
Right.
are they doing? What are they
Right.
doing? Are they going to tuition? Are they, are they studying somewhere else? How are they getting
Right.
better marks? Similarly,
Correct.
companies are also interested to
Okay.
to find out about their peers and how well. So this I think that's a very good thing, and that is how
Correct.
I think ERPs can build this awareness on ESG, make it more relevant for or
Correct.
for the companies, and so that the whole idea is that this awareness, this sensitization around ESG needs to be much higher, and that
Right.
is the role that ERPs can provide.
First class. First class. Suman, I think you have covered a wide range of issues. And before we just wind up, one final question, which is related to the talent. Since we are actually in the area of ESG talent development, so at the end of everything, what hits us is the question of talent issues. So when you guys actually look forward towards taking on board ESG rating analysts, what are the kind of skill set, competency, background do you really look for, or what do you really look for in the candidate? To take a call that the person will be a good fit as a ESG rating analyst.
Right. Right. So, to be honest, we have our own, as I said, we have our own proprietary
Okay,
methodology.
right,
We have our own technological tools. So
right,
naturally, some in-house training. It will take somebody to go through a certain
right,
more on the job kind of a training, or there are some sessions also, training sessions that are required within the company
right,
after one comes to really come to the same page, to really
correct,
understand on what we are doing. Having
right,
said that, when we have been hiring, we have not been hiring very aggressively, because we are kind of having a kind of, as I
right,
said, that we have a lot of things done through technology. So
right,
the manual component has been reduced a lot. So we are
correct,
not really hired a big team, but we have
correct,
a moderately sized team, and
right,
the kind of hiring we are doing, what I can share is, we first of all, today when we are hiring, we are looking at backgrounds a little bit on sustainability. So
okay,
when I say a background in sustainability, means some let's say somebody with a background in environment,
huh,
somebody with a background maybe even some kind of let us say social background. We have hired
okay,
people, just for an example, from people who have done social studies, in
right,
some, there
right,
are some reputed institutes which
huh,
are into social studies. We have hired from them also. So
okay,
some kind of exposure we prefer to environment, the social part, or even overall understanding of governance matters.
okay,
Some that's come along with your
right,
basic abilities as as an analyst. So one
correct,
needs to have that analyst skill set, which you are well aware of,
okay,
which is
okay,
you need to be one is a little
hmm,
what I would say, very
hmm,
objective in the way
hmm,
you think,
hmm, hmm,
little mathematical skill,
hmm,
or you can
hmm,
say Excel sheet skills, very
hmm,
conversant with, because we deal with a lot of Excel sheets with a lot of
right,
calculations. So ability to pick up fast. And the other
right,
thing is, be aware of this whole space of ESG, what's happening, what this
hmm,
controversy thing is very important for
hmm,
us. So a
hmm,
lot of reading up is necessary to
hmm,
understand what's happening, how it is impacting the
hmm,
society, environment, any corporate action. Does it
hmm,
impact the society? Does it impact the
hmm,
environment? What's the
hmm,
controversy? So reading up and being aware of what is
right,
happening, those are the abilities that we are looking at.
okay, okay, okay. Great. I think, Suman, I don't know how time flew. I think it's almost
Yeah,
an
it's
1 hour,
almost.
for 50, 55 minutes we have been talking.
Yeah.
But I think you covered a wide
Yeah,
range
we
of.
can go on and on, but I
I
think there
know,
has
I
to
know.
be
No, no,
some
no. I think it was
timeline.
a lovely conversation, lovely talking to you. So with that, Suman, I think for the moment, until there are any questions, let me just check out. Dr. Shavita, do you have any questions? Anything?
Then, as there were nothing from my
As
end,
of now, nothing. Fine, no problem, because
anything.
I think Suman sir has been so transparent, and with all the issues, I think there is hardly left for any questions. So that's
Glad
it. No, really, I
that's
think I
that.
think you have
But
covered a lot.
I will be happy to, even offline, if
Correct,
somebody, any of the
sure,
person who is
correct,
listening to this video or
right,
this chat, if anybody has a question, I'll be very, they can write
true,
to me or they can message me. I'll be very happy to reach
perfect,
out to me
perfect,
on LinkedIn, whatever platform.
perfect,
I'll be
perfect,
happy to address it.
perfect. Thank you, Suman, for your time. So with that, I pass it on to Harshita. I think to formally thank Suman sir. Yeah,
Yes.
Harshita, it's up to you. Yeah,
Thank you for joining us for today's insightful online session with Sustrate Advisory. We are grateful to our esteemed speaker, Suman Chowdhury sir, for sharing the valuable expertise and experiences. Special thanks to our co-founder, Dr. Anirban Sen Gupta sir, for moderating the session and providing through provoking insights. We appreciate the active participation and engaging. There were no possibility questions. So thank you for faculty and participants. Your enthusiasm made the session truly enriching. Stay tuned for more informative sessions with Sister Advisory. Best regards, Harshita Singh.
Before we end, let me thank Anirban for initiating this. I think this is a great initiative to kind of bring up the awareness, to bring up develop understanding and skill sets on sustainability, on matters of on ESG, which actually will help the whole ecosystem. So it's a
right.
very noble initiative, and I wish Sistrat all the best and all the best to you. Thank you.